Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Tuesday, May 14th, 2019. Members of the site, this will be largely a recap of the midday update that I did today, but of course I will update what happened since then and share my thoughts going forward. So starting out again to recap, and for public YouTube subscribers or members of the site coming in and watching these videos. As public content, the QQQ yesterday hit the low of 178.04, I'm sorry, 178.06. So essentially that's the 178 target being hit, where I was favoring a bounce, and that's what we got today. So we had about a 1% lift of the Qs. We faded a lot of that. We were up actually quite a bit earlier. I'll get to the intraday charts in a second. So again, nothing goes down forever, and it was a pretty significant level, and probably as, if not more importantly, was that level on SPY. And that was the 281-ish level, and again, that was the level that capped all the advances back in the fourth quarter in 2018. And again, we danced across it for well over a month and a half, 2 months actually. It took after several attempts. You can see a lot of intraday or daily breaks, but we didn't have a weekly close until we gapped above it right here and then closed a week above it. So still a significant level in my opinion. So resistance once broken becomes support. That's technical analysis 101. So we fell to support while oversold, and a bounce so far today. Really nothing, there's nothing that changes anything in the daily or weekly charts right now. It's just a an up day. Nothing huge, again, to the upside or again, nothing that's changed technically. I added this this morning a price channel here. You can see a price channel forming on SPY. That's something to watch. It's daily candlesticks, so therefore you don't really give it too much attention. If you get an intraday pop like you had here the other day, that would have been Friday. Yeah, Friday's high. I always say trend line drawing is an art, not a science, but I'll use the a trend line that has the most reactions on both the candlestick shadows, those are the skinny part, and or the body. So that's what you have there. So again, something to watch. And you could probably replicate that roughly on a 60-minute chart as well. And so far we ran up to the top of that channel. But more importantly, this morning I had posted on the site before the market opened some updated bounce targets, and shared my thoughts there. Let's look at those and talk about what happened today. So these are Fibonacci's here. I'll take these fibs off for now. All right, so if you recall, was it last week, Friday, late in the week, I think Thursday or Friday? Yeah, it would have been, because we hit that on Friday. I posted these with the time were my uppermost bounce targets right here, 288.83 all the way up to this resistance level here around 291.65. And if you recall, we hit that first one on Friday, followed by the gap down and the very violent reaction. So I interpreted that, and again, I'm reading the tea leaves here as we go. That's why I always say the charts are dynamic, and so is my analysis. So I read that as bearish because we bounced to what I figured would be the minimum bounce target at that point in time. Was leading towards the bounce, so we got it. It was contained there. So this morning I added these two levels here in the purple lines, and as I mentioned in that video, we could really include this one. Let me go ahead and do that now in that range, even though it was from last week, but it is, as I said in this morning's video, my uppermost bounce target again. Well, that was the lowermost before, uppermost this time around. And I said the same thing. We'll watch the nature of this bounce. We had positive divergence coming into today on the RSI on both QQQ, SPY, as well as the futures, ES and NQ. So they all had the divergences, and they played out for a bounce. From low to high, it was even more so in the futures, the range. But so that's what happened today as we rallied up. And as I mentioned earlier, we had this is what I call a momentum-fueled overshoot. When you have a lot of velocity or upside momentum, or on the downside, a lot of momentum coming into a support or resistance level, it's very common to overshoot it. The momentum carries you forward. And then that's what happened today. So we overshot, and so effectively that's a failure there. We danced around it all day, and we had a pretty impulsive rejection at the close. Now, I did mention in the trading room before the last minute dump, we had, and it could still turn out to be this. I'll tell you, I'm slightly leaning that way right now, that we were setting up into flagging type action. In other words, for a bull flag, it's a continuation pattern, that you have a period of consolidation after a strong, mostly unidirectional rip, and that's the flagpole. Now again, in an ideal bull flag, you don't have this part here. You have that flag type pattern I drew right here, and then you look for an upside break, and your measured target would be and that's just the measured target, of course, the distance of the flagpole or the move leading up to the top of the flag there. Despite the late day dump, I'm leaning that way, but I can tell you the stakes are high now, and it can go either way. I said that before. We come down, continue down tomorrow, take out those lows. We're going to take out that key support on the daily chart as well. So as of now, like I said, I'm leaning towards more upside. To right now, let's just say this is my preferred near-term target. My confidence is very high. Sometimes it's pretty easy to call the minor rips and dips, but remember the bigger picture is this: we had a lot of technical damage inflicted on the charts in the last week or so, and that happened on the heels of one of the most overextended, irrational, in my opinion, rallies in a long time. In other words, the rally itself was not only, it was expected, but we overshot where I figured it would go, even at the uppermost limit. So I think a lot will agree the market got ahead of itself, and again, then we had a lot of technical developments bearish. We double top failure on the SPY. It failed right around the previous 2018 highs. Trendline breaks in XLK, all the FANG stocks, QQQ, every index, and then some pretty impulsive selling. And like I said, seeing the failure on Friday at that bounce back to resistance, and so far today. So, like I said, I'll share my thoughts, whether they pan out or not. Near term, that's what I'm looking for. Another upside day tomorrow, and maybe get back in. And what I shared with members earlier today was, my plan is just like before. And I covered a lot of shorts here. Smelled a rally coming on Friday. Same thing today. Covered reversed. Had some actually positions reverse overnight in futures with standing orders. And then gamed up the rally, and from here to here is where I plan to scale back in my longer term accounts. My swing trading account, my active trading account, I'm in and out all day long. I can place over a dozen futures trades round trip, or stocks, whatever I'm trading on a single stock or futures contract in a single day, and that's not uncommon when volatility's high. But I'm talking swing trading now, longer term accounts, accounts I'm positioning for the trend, and so that is, as of now, that's my plan, is to scale in, which I started to do, add back short exposure from here all the way up to, but not above. That's the thing, not above that point. If we go above there, I'm more concerned about my exit plan, how to scale out or get out of those shorts. And certainly if we took out that 291.65-ish resistance level, which was my uppermost bounce target as of last week, not anymore, then yeah, that wouldn't be good. Probably that would open the door for a new high. So there it is. So this is the sort of the range, if you will. Let's give you a cleaner version of this chart. Draw that range one more time, and then try to do the arrow tools. I think you see what I'm doing here. So this is it, and it's a relatively tight range too. If you look at from that 284.50-ish level up there, they're about 280. We'll call it 289 or so. It's about a 1.5% gain, and again, from the bottom of the range, that is. And again, that's looking for a swing trade with more downside to come on the short side. And again, if it starts to go up above that level, I don't think it's a good idea to add. That doesn't mean we can't pop that level in reverse, but I would think right now, with everything that's gone on lately, the market has no business to get up there. And the earlier we reverse, the quicker these bounces get sold into, like today so far, and the market's closed now. That was right there is how we close. That's the end of the day dump. The earlier they sell into the rallies, it just shows you that the supply and demand dynamics, the supply demand is shifted now, and you have more sellers and the buyers that are out there that are in the market, they want out. They want to take advantage of any bounce to get out of their positions. Oh God, excuse me. I need a drink of water here. Positions. So that's what I'm watching right now. And here's that price channel, if you will, on SPY. You can draw it here, as I said, on the 60-minute chart if you want. And actually, I'll just take that divergence line that I already had there and extend it up like that. So there's a channel we failed at today. It's one channel trade-off, so that's really intersecting resistance levels, downtrend line, and the 281.41 level. If we can pop it tomorrow, or in the overnight session, just imagine what I guess will probably happen. Market likes to, deny objective entry, so I think that late day dump probably scared out some longs, maybe ramped up some more shorts to go back in, and that's what the market likes to do. So kind of leaning that way, gap up, burn the shorts that jumped in today late, and kind of deny another objective entry to longs. But if it goes the other way, guys, I'm not sold on that. If it goes the other way and the futures are down big overnight, you can see here, I don't have support down here all the way to about 277.75. And from where we closed, you're talking a pretty good slide. And that's just the first support level. If that happens, that's going to be pretty darn bearish. Remember, the markets are still at the point where if we continue down impulsively like we've been doing the last few days, minus today and Friday's, recovery rallies, they could break, meaning you get a ton of forced margin selling, and that selling begets more selling when you hit that point. You get fund redemptions. You sell your QQQ or your S&P 500 index fund, and then the fund companies that run the ETFs and the mutual funds, they have to then liquidate, and that means selling the stocks that are within there. So that's what happens during strong sell-off. Selling begets more selling, and that's why stocks can fall so fast. All right, so we're not there yet. Let's just see what happens. And again, as I said, that right now we held support on the daily chart. So just jumping back to kind of the bigger picture, not to get lost in the 60-minute charts. Like I say, support is support until unless broken. So you really want to see break down below that 281. You can wait to see yesterday's lows go, but I think at this point a break below 281 or so probably do the trick to bring us down to the next support level target there around 277.50. Okay, here's the QQQ 60-minute chart. I talked about this in today's video and on the front page post for members of the site. The third and final target of QQQ was actually hit in the after-hour session yesterday, or I think it's 6 p.m. exactly, if I'm not mistaken, Eastern time. And so I put up a front page post, and if you're new to trading, investing, you can check out on rightsideofthechart.com. It was this morning's post. If you scroll down on the home page, about halfway down, you get to the front page post, and there's a chart just about some considerations to make with your order entries when you're trading in a volatile market like this, and it has to do with setting orders to when your profit target is hit. Set a limit order. If you have a position you're in and you have a price target of, let's say, 100 on XYZ that you're trading long, you can set that order. It should be good to cancel. I also talk about the benefit of using OCO. One cancels the other orders. But you set your limit orders and allow them to be filled outside the regular trading hours, because during volatile markets like we have now, when volatility spikes, and during earnings season when there's a lot of movement overnight from big stocks reporting, you can use that volatility to exit a trade at your profit target. So again, you might want to check that article out, and some trading tips in general in there. And again, the point would have been that QQQ hit that level last night, that final target, and would have been nice to exit that out. So I may consider, as I said, I've always used regular session trades only for the official trades, but I may consider, especially as volatility I think is maybe here to stay for the remainder of the year, may start using just add the criteria to just set those profit targets to be filled if they're hit outside of the regular trading hours, pre-market or post-market trades. All right, so there's QQQ. Oh yeah, I wanted to mention, here's the targets that I added today. These are my new, bounce targets. Again, put up this morning, and you can see we hit that 181.13. Brief momentum fueled overshoot, and then we failed it. So far that's a rejection there. Yeah, on face value that would be bearish, but it was, saved by the bell, if you will. 4 o'clock bell closed out, so this could still prove to be a bull flag, and again, I'm leaning that way, and so that would take us up then to at least my second bounce target here at 182.76 in QQQ. And as with SPY, oh, and there's also a trend line that could come into play. That goes to the left of the chart there. But as with SPY, we'll just say color code this one as my max bounce target. In other words, that's where I think if the case for the bearish scenario that we're going down, another leg down in the market, a considerable leg down, that would be the uppermost bounce target right now. And this is really my preferred area right here. This is what I want to see. So, like I said, as with SPY, this is really my scale-in zone right here on Q. And I trade mostly the Qs. I don't, if I'm trading an index ETF in lieu of individual stocks or anything else, or if I'm trading the futures, I prefer NQ because it's just more bang for your buck. SPY is too diluted with utilities and high dividend paying stocks, things like that. So on a good day, QQQ is going to go up more, and on a bad day it's going to go down more. So if you're going long or short and you get it right, why trade SPY when you can make more on QQQ? It's pretty simple to me. So that's that. And again, this is where really I'm interested in scaling in up to but not above a back test of that trend line there. And really don't want to see us get above 185.53, or it just sort of blurs, if you will, the bearish scenario and technicals that are in play right now, which says we're probably going to go down more in QQQ and in the market. So that's what I'm looking for, something like that. That's not an official target or anything like that. And I did mention to members on the site that I left the trade on because I still think the final target and then some will be hit in QQQ. So we'll see. Like I said, the charts are dynamic, and so is my analysis. So let's see what happens tomorrow. Like I said, nothing, well, not nothing, but it would be quite bearish if we gap down tomorrow, especially if we gap below this low. If futures tanked overnight, opened up, we do have some support that will come into play there around 176.74, and of course if that gets smashed through like it's not there, it just tells you there's something wrong in this market and you do not want to be long, and you want to be short. So anyway, so I'll continue in longer term accounts, position accounts, continue to scale in there, and trading account, I'm going to just have some longs that reversed into from shorts yesterday. Here, I'll show you that. Let's go to NQ. Here's the NQ 60-minute chart. Here's that 72.75 level I've been harping on since we were up here. That was my target for quite a while. We broke trend. There's your primary trend line right here. Here, let me show you what I'm talking about. This is the trend line off the lows on December 24th. This was your sell signal, your breakdown in QQQ or NQ, the futures. We were drifting down lower. That was my first price target, hit there, danced around it for a while, came down, and as always, I always cover short trades, always cover above the actual support level, and long positions I always sell just before the actual resistance level, because a lot of times, if all eyes are on a level, the buyers will step in early. So that's what I did. And that's what I mentioned in the article today too on the homepage, which is public content about OCO orders. You set when you take a position, if it's a long, you take it right here. You set your stop loss below. You set your price target above. You set them good to cancel, so those orders stay open. Like I said, nice thing about trading futures is around the clock, so you're not going to get burned on a gap down, since the futures trade around the clock, unless you happen to take the contracts home on Friday night. Yeah, you have the overnight risk. Other than that, you don't have overnight risk like you do on stocks, so you can leave those orders open, and one of two things happen: you'll either be stopped out or your target will be hit. So that's what I'm looking at, and also it kind of lines up here. Here, let me clean out these all the lines on the chart. We have this downtrend line as well. We have it on, and I showed you on SPY. I showed you the price channel. So there's a similar downtrend line on QQQ that hasn't even been hit yet. So essentially, we fell to support, pretty well-defined support. We bounced, favoring a little more upside, and on the futures, certainly be fine and may remain long all the way up here to about 75.42 if the market, market willing, of course, and certainly be interested in adding some short exposure there. But we'll see. Again, you get to take the charts day by day, minute by minute, and as of now, that's kind of the way I'm leaning. And then for the bear case, an impulsive break down below that level, 72.75, that opens the door for another wave of selling to the downside. So that's it. Those are the levels to watch, and I think I covered everything I wanted to. Yeah, okay. That's it. This has been Randy Finney with Right Side of the Chart. Have a great day.